Hello and welcome to
Either way.
Beat Poverty in America with Dawnn Hills and Margie Basaraba. I am excited and honored to introduce you to Margie. Margie is a real estate agent with EXP Realty in Eugene, Oregon. Her specialty is helping people get into homes of their dreams and, more importantly, showing her clients, friends, and family how to get all of their debt, including that 30-year mortgage, paid off in as little as 5 to 10 years without changing their lifestyle. So, without further ado, I'd like to introduce you to Margie Basaraba.
Great. Yes, I love the way you put that little twirl with your in the name there. But I do have people singing and dancing to me all over the world, and I love it. So
Awesome. So
yeah,
tell me about Margie. Tell me how Margie came to be and how Margie came to do what she does and why she does what she does.
yeah, I will certainly do that, and I'll try to keep it the Cliff Note version
Okay.
because I've been around the block a few times. Let's just say.
All
But
right.
my husband and I moved back to Eugene, Oregon, in May of 2017.
Mhm.
And I had the opportunity at that point to really just decide what is it that I really want to do. I'd always been an entrepreneur and always had owned my own business for quite a while. I'd had quite a career with the phone company and so forth before that, but I've always been a small business owner. And when we moved back here to Eugene to be with our family, we have 4 kids here and 4 grandsons. My other 2 grandsons live elsewhere, and then my other 2 kids also. But I really, I've always wanted to be able to find something to help people, and I had my real estate license back in 2001. But when I came back to Eugene and I was looking at different options, I just didn't want to do real estate the same old way. Who do you know that wants to buy or sell a home? Everybody's asking that same question. And, I mean, with the advent of the internet, people just don't value the services that a realtor brings to the table. They think they can do it themselves. Why are they really paying us all this 6% of the commission or whatever that is, right? But when I joined EXP Realty, they do things different. It's the world's fastest growing company brand in real estate. And we have agents all over the US, in Canada, the UK, Australia, and we're opening 5 more countries before the end of the year. And what makes us different is that we do we're all agent owners. And so the company gives us tools so that we can be a real estate agent to be helping our clients before the transaction, the expertise to do it during the transaction. But more importantly, they give us the leverage to be able to offer additional services to be able to help people after the sale.
I
Yeah.
like it. So when you're looking at your client base and you're looking at how we work together, how do you see our relationship when you think about taking on different interviews or
Yeah.
opportunities to share or
Well, think
connect?
about it. Yeah. I mean, I love working with other real estate professionals, but I really love working with financial professionals like Dawn that really have their clients' best interests at heart. And she wants to be able to help them really get that retirement plan and be able to enjoy life, not
Mm,
just, work paycheck to paycheck and be in debt all the time, right? And so she
right.
works tirelessly to do that. But a lot of times, and I hear this from other financial planners too, it's like I go and I design this great retirement plan, but they have a hard time keeping to that and getting into a financial position that allows them to be able to create that.
Yes, and insurance does that. And the financial planner and the insurance professional are actually different. Just
Absolutely.
for clarity, the financial planner is paid a fee and the insurance professional is paid by the carrier. For
Oh, yeah,
actually insurance professionals like myself, we're
yeah,
paid directly by the carrier. But more
right.
importantly, working with individuals like yourself that you've engaged them, you now have brought them up to a space where they have their own home, they've acquired all of the information that's necessary for them to close, and they've put down the money and now moved into their home. Now our opportunity is to help them keep it.
Keep it. And think about what that can do for a family if they get their home and they've just signed that 30-year mortgage.
Mm,
It's kind of daunting when you think about it.
yeah.
But just think what it does when I go to them and I say, hey, what if I can show you a way, a financial GPS, a system that's easy to follow, that you don't have to change your lifestyle, you don't have to refinance or do a modification or give up things. And I could show you a way that you could get that mortgage paid off in as little as 5 to 10 years.
Ding, 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 ding.
Well, hello.
Yeah.
Why wouldn't you do that? I mean, if you understand mortgages, and I wish I would have known this many, many years ago when I had my mortgage and I was doing the same thing that people do, refinance to get a little bit better rate, thinking that that's doing something. Well, it is doing a little something because it's freeing up some money in the budget, but people just go right back into the same thing and the same patterns, and they end up having to refinance over and over again. The problem with that scenario and why the banks love it is because every time you do a refinance, it just starts that 30-year cycle all over again. And they wrap the
Wow.
of a refinance. Oh, we don't charge you to do a refinance. You don't have any money out of pocket. It's going to give you a little bit of savings in your monthly payment, but I just re-extended. You had it paid down. Now I'm re-extending you back to the 30 years. Unless, I mean, some people are able to get like a 15-year or something, but most people just see, hey, they don't really think about that it extends at that 30 years. And the fees for that, it's just, oh, well, it's just wrapped into the payment. But why do you want to continue to pay those excessive fees to the banks? Because mortgages are all loaded up front. Most people have an average interest rate of maybe 3%, 4% right now they're running. And, and they're like, great, that's a great payment. So if they're looking at what bills to pay off and how to get out of debt, they just kind of say, oh, well, that I've got 3% over here. I've got a credit card over here that's 25%. I've got my auto loan. I've got my student loans. I've got all of these personal and business debts. But they don't think about on this mortgage up till almost year 20, they're paying, more than half of their payment is going towards interest every single month. And it very slowly pays the principal until almost year 21. And then it really starts accelerating.
Well, answer me this question.
Mhm.
I'm really curious to understand, what is PMI?
Yeah, so PMI is what a client would pay, or a customer that's trying to buy a home and get a mortgage. It's called private mortgage insurance.
Mm.
And back in the day, people used to have to come up with 20% down to be able to get into a home. But then the cost of housing was rising, and people couldn't afford to do that. So what they did is they said, okay, well, we'll fund you with as little as maybe 5 to 10% down, but you have to pay a more private mortgage insurance until you get at least 20% of your equity paid off. Just so in case it's kind of it's an insurance for the provider, so that if you default, they've got some protection.
But it
So
has nothing to do with the actual people in the home. It doesn't
no,
protect them.
not any kind of insurance as you're used to, or protecting it's
Client,
protecting the bank or the mortgage,
not the client.
not the client. Yeah. And there again, so they're paying that until they get the equity built up. And most people don't even realize, they forget about it. And if the bank doesn't call you and tell you to say, hey, you don't really need to pay PMI any longer because you've gotten to 20% of your mortgage. But it usually takes so long to get to 20% when you look at an amortization schedule, that they've totally forgotten about it, and it's just part of the payment.
What is an amortization?
It's a hard word to say, isn't it? Amortization schedule. So
Yes.
that is the schedule of, you look at your payments. 360 payments is what it is, 30 years, 360 payments. And so it just tells you what you pay each month, and it shows you what part is pay, what part is interest, what part is, your escrow, and what part is principal. So it just amortize. I don't really know the real definition of amortize, but it's taking the money that you borrow and just spreading it out over the course of that 30 years. But the problem is front loaded with interest up front, which is benefits the bank, does not benefit you at all. And at the very end of the mortgage, then you start seeing the benefit, because majority of your payment is now they've gotten more than their fair share of money off of the loan. And again, most people don't stay in their home. I mean, I think the banks realize that that most people are not going to stay in their home for 20 years or more. A lot of times they're switching loans, they're buying a new home, upgrading, downsizing. But
And that's where your program comes into play,
right,
with the 5 to 10 years, because most
right.
people don't want to move before 5 years. But between that 5 and 10-year period of time, they have options.
Yeah. So the point is that if you have more equity in your home, then when you go to sell it, then you have more money in your pocket to put towards the other home. By utilizing our program, which is a financial GPS, it's a software program that they purchase. We show them how it can help them. It shows them what to pay, when to pay, and how much to be able to get their mortgage and all their other debt, not just the mortgage, but it includes student loans, car loans, credit cards, and any personal or business loans. But it takes the whole picture. And what I do, or we do as agents for UFinancial, which is the company that provides this service to enhance my real estate business, what we do is we do a free analysis. It looks at where you are today, and then it shows you, if you stay paying the bank, how much interest that you're paying. Because most people have not a clue. Most people don't even look at all of their debt picture in one place. And when you see the amount of interest that you're paying, it just floors most people. So that's what we do as a service, is that free analysis to show people where they're at. And then we do an analysis saying, okay, if you put the Money Max account to work for you, which is the service that we offer, and you actually follow that financial GPS telling you what to pay, when to pay, and how much, this is what your debt-free date will be, and this is how much interest you're going to save. One of my clients in California, I know you're in California, a lot of your clients are as well. So she had a home in California. It was $455,000.
Average.
Really, from what I understand in real estate, is an average home, not even much. Where here, that's like a luxury home in Eugene. Why all the Californians are coming here, because if they can sell their house down there, then they come up here and they get 3 times the house for the same amount of money.
And then come back to California to visit.
And yeah, just visit. Yeah, and don't have to put up with all the traffic and all the other lifestyle of California. But
yeah.
So she had that mortgage. They had 4 auto loans, because they had to keeping up with the Joneses, right? They had one for him, one for her, and the 2 kids. They had credit cards, and they'd been in the home a while, and about 12 years, but they had just refinanced because of spending decisions that they had made or whatever, and they were trying to get a lower interest rate. So now they were back up to 30 years, even though they'd been in the home for 12 already. And the fees for that refinance were wrapped in there. But we were able to take them down from owing 29.3 years down to getting it paid off in less than 12 years, and saving them $294,000 in interest. So it is not insignificant money. And people just say, well, I owe this money. It's, I can afford the payment. My house payment's $1,500 a month. It's just in your budget. You just deal with it. And then when emergencies happen, everything else goes, but you never, the mortgage is the last thing you're not going to pay, because you got to keep that home over the roof over your head, right? So a lot of people will get in trouble with credit cards or not pay other, the student loans are a huge problem in America right now. And they'll let those go because they think that this is such a low interest anyways, but this is the one that's hurting them the most.
To that end, if we think about it, even doing the mortgage protection, which is for me what I come into a home and do, it would make my job so much easier because I only have to cover 10 years opposed to their whole life. And if they're
Yeah,
refinancing at 50 or 60 years old, it's not going to be a voracious, amount of premium for them to be able to protect their assets if anything should happen to one or the other. So
yeah.
that's a game changer. That
Yeah.
is
Well,
amazing.
and just think about this, Dawn. It's like you're being able to give them a light at the end of the tunnel. And by utilizing this program, we can designate a certain amount of money to start going towards a wealth plan, still while getting rid of the debt much quicker. And then once they're done with that, when we do our program, we tell them, you've already in the habit of spending that money. Now, don't just go blow it. Go start putting that into a wealth plan. If you put it in a wealth plan at just 1%, this is the kind of money that you could have because we don't do wealth products. So we recommend, and I use it in my real estate business because I want them to be able to, a lot of people want to put real estate into their investment portfolio.
Right.
They want to have a rental home or they want to have a vacation home. Or when the kids are ready to go to college, does it make more sense to have a home in the college town where they are that the other kids that they're sharing the rooms with are paying the mortgage? I mean, there's a lot of really creative ways that you can use real estate in an investment portfolio and it'll pay for itself. I had a friend today that told me that they bought a rental house at a really good rate. He's in Texas and they bought a home, I don't know how many, 20 years ago. And those renters, it's been rented almost the whole time. And those renters basically paid for that house for him. And now they have a paid for house and still can rent it out. And it is an asset in their portfolio. And he never paid a dime for it because
Wow.
the renters paid for it.
That's the other piece I want to wrap this up with because
Okay.
I believe, well, I want to respect your time, of course. I believe that when people think about life insurance, they don't understand the concept of all the different intricacies that it has and opportunities. And for a homeowner, the insurance products that have the living benefits attached to them. So
Right.
if they get terminally ill or critically or chronically ill, or they just get hurt and can't work, they have opportunities within that policy that still will pay the mortgage or will help them pay for gas, food, or things that they need in the interim. Because when you're hurt or you're sick, the lights don't just pay for itself. The gas
Absolutely.
don't just get into the car. People still
A
need to
big on my
eat.
nose, like bewitched, and it's just all going to magically happen, right? If
Right. And I really am excited. I mean, this has been our third year. I think we've been really trying to figure out how to work together. And I think we've hit on something.
Right,
I,
because like I say, the reason that they can't get the protections in or they really can't even see how they could come up with any money they know they need life insurance. They know they need these products to protect their family, but they're living paycheck to paycheck. And the majority of a lot of that income is going directly to the bank when if they could be putting that back in their pocket getting paid off much sooner and start putting money into those wealth planning products, it just makes a huge amount of difference. Think of a young family that has kids and they just got a mortgage. They've got kids 3, 4, and 5, whatever in that age range. And they've got 30 years left on a mortgage now. So what happens when they're ready to go to college? I'm sure you see that a lot. People needing to save for college and you're trying to help them do that, but there is no money left at the end of the month. And people are having a hard time saving, especially because, with everything going on in our society right now, people are, being cut back. People are losing jobs. They're not, if they do keep a job, they're not being able to work as many hours. I had a friend that worked at the University of Oregon and he's been there forever, but he's having to do the same amount of work for 15% less pay because it's a trickle down thing, right? The kids can't go to school in person. It's all online. And then, so their enrollment is down. And his job was having to do with doing all the kids on campus. So there isn't any kids on campus. So there isn't really a job for him. So they're kind of keeping him on in other capacities, but they had to cut his pay because the tuition isn't there. I mean, it's just, we don't know where all this whole thing is going to go. But the key is that you do have control over what you have right now. So find a way, take a look, take advantage of that free personalized savings report that we do. Look at what you have and don't keep your head in the sand. Look at what you have and say, is there a better way? We just don't teach our kids and we don't teach people about finances.
Right.
Right. And you're trying to do that from your end. If we do it from this end and together, we can really make a difference. Our motto is buying back America one family at a time.
Which helps me beat poverty in America.
I know. And it's like we have control of that, but we've got to put the tools into people's hands and to be able to give them the power back. All of those banking, principles that the, compound interest and all of that, compound interest working for you is great.
Yes.
Compound interest working against you, like your mortgage, is horrible. And the banks are really good at that, but they don't teach us that. They want to keep those kind of things secret.
Well,
So,
and just to be fair to the banks, they change slowly. And we're in a society that's changing a minute, a second, a day.
Yeah.
I mean, yet what we were doing yesterday, what was viable yesterday is not viable today. And the banks they're just not keeping up.
I mean, I know you want any business to be profitable. This really is just exorbitant. When you're looking at somebody's payment and you thought you had a 3.5% mortgage, but you start looking at that and you're paying 50 to 60, sometimes 70 and 80% of your payment is going towards interest up until almost more than half of the mortgage. That is not right. And there is a better way. You can't really do it on your own. I mean, you can try, you can, do what some of the gurus say, like make an extra payment, or people think they round up and that's doing something because they're putting extra towards their principal, but it is doing absolutely so little that it's not making a big dent. It makes people feel good, but it isn't really attacking the debt. So
Wow.
if there's a plan that can help you cut it in 1/2 to 1/3 the time, take advantage of the free analysis. I'd love to be able to show people and help your clients. And then you can then turn around and help them really plan their future so that they don't have to survive, they can thrive.
Well, what I'd like for you to do, Margie, is when I post this video of our recording, I would like that link so that I can add it in so that they can click on it to get that analysis. And I'll also put the link in. I have a mortgage protection link as well to teach them about that. And we could have those two links to educate them. Americans are smart, but the information hasn't been readily available.
They'll be able to make an educated decision and say, yeah, why wouldn't I do it? And then they can help us in this mission. If we all take a step and take a stand and say there is a better way, and we all have that same mission, let's all work together to really, like you say, buy back America one family at a time, and we can make a difference. That's my motto. When I first came up with my company name, it was Mad Enterprises, and that was really original. Margie and Daryl, who's my husband, Enterprises, right? Well, now it's like, make a difference, mad. So we're going to get mad about debt. We're going to make a difference in America. And together, we really can make a difference.
We can really beat poverty. And I think when people understand, that there is a choice, there's an option, there's an opportunity, that you don't have to be poor, you don't have to live paycheck to paycheck. And we put that information out there, I think as a team, we really will help people that want to be helped, and continue to put the information out and really help them understand that PMI is for the bank, not for them. Oftentimes when I'm having a conversation, I respond to responders. And I call them and they says, oh, well, I already have that. Well,
I already have mortgage insurance.
And it's like, no, the bank does, but you don't. And it has no living benefits.
It's an
Um,
education thing, and
yes,
we all need to educate. And I just, like you say, once you see this, you can't unsee it,
right.
and you just have to share it with people. And my mission and your mission needs to be just get the word out. Let
Yes,
them see it for themselves and
yes,
give them the information so they can make an educated decision,
yes,
and then put the tool in their hands so that they
yes.
can start making a difference and start this process for their own family and share it with everyone that they know.
Well, thank you so
Yeah.
much, Margie. I am so excited about all the work we're going to do going forward. I cannot wait. I'm super stoked. We
Yes,
will,
I
we
do.
will beat poverty in America. We will.
Absolutely. Let's do it, friend.
Yes, let's. Without further, thank you so much for coming on the show. Thank you for your time. I appreciate your hard work and your earnestness to help me in this mission and our mission. And I look forward to us talking more about this and maybe coming back around third quarter, maybe coming back around at some point and talking about our success that we've had.
Yeah.
How about that?
Let's do that. Yeah. And we do regular, webinars, seminars for people that are education. So,
Okay.
we could have you help promote that to people that are interested as well. They can register for free and come check out the information, hear the story without um,
Pitch.
yeah, it's just education. Get yourself educated and make a difference. And it was very nice. My pleasure. I'm so glad. We met through LinkedIn and a women's group on LinkedIn. And I'm telling you, I have met more special people through those kind of social media connections. But we connected from day one. And again, we've just been trying to find the right solution to really be able to help people. And now
Yes.
we're on the same path, and it feels really great. So thanks for including me in your seminar about beating poverty. For sure, that's an important subject. So thanks for all you do.
Thank you so much.
Have a great night.
You too, beautiful.
That was today's episode of Beat Poverty in America with Dawnn Hills. Remember, like, share, and subscribe to this video. Dawnn Hills, insurance for your every need.